Okay, good morning traders. Welcome to the All Markets webinar. This is Bruce at Bookmap. We'll be going through the live order flow using Bookmap. By understanding the auction process, understanding the participants' behavior in the auction process via orders. This is the only way that participants can engage in the market. It's via their orders. Therefore, order flow and understanding the orders gives us an edge. And that's what we're here for. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only. It should not be considered specific investment advice nor recommendations. The risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so a couple of news items right off the bat. First off, we will hold the onboarding webinar to Bookmap on Tuesdays at 1 p.m. So if you're brand new to Bookmap, or you want to get up and running and you're struggling, come to this webinar. It's about a half hour long on Tuesday at 1 p.m. East Coast time. Here is the link for it in the chat, and it is held in Zoom, so you will need to register for it. We can put this into the chat here in YouTube. There you go. And then over here, if you're new, into the All Markets webinar as well. We'll just go through the process of logging into bookmap.com, downloading the platform, subscribing to data. You will need to subscribe to data in order to connect Bookmap to the live markets. And then we'll install the platform, get it up and running, and connect it to data for crypto, stocks, and for futures. Okay, and that's the webinar. It's very simple. It's very straightforward to get you up and running. All right, for those of you in the Bookmap Academy, the MBO bundle add-on, we announced this yesterday. Stephen, you were asking me about the MBO bundle, so that's why I kind of held off, because we're offering it for free right now until May 10th. So you can, it's only for our Bookmap Academy members. Okay, so if you are in the Academy, and many of you are, just use the link here, and I can place this into the chat as well. There, Dan just put it in into the chat. Or you can use your phone and take a screenshot of this to sign up. Okay, so we're going to collect the emails so we know whose licenses to give the free access to, etc. All right, so we don't need your license key. We just need the bookmap.com registered email. That's what we need, and we can take it from there. Go for it. You will be refunded if you already subscribe to the MBO bundle on the marketplace. All right, so it'll be prorated. So like, for example, if you have already paid for and used 2 weeks of your MBO bundle, we will refund that amount for you. Okay, anyway, it started yesterday, and it is free now. Okay, for 1 month, and then we'll see from there. What we're looking for is to get it out there, get people understand it better, and we want you guys to create content based on it. We'll go through it in the webinars in detail, and those that do take advantage of this will get 2 times the credit in the Bookmap Academy for your journaling. Okay, so that's a pretty nice deal on both sides here, on coming in with free MBO bundle as well as 2 times the credit. All right, so let's jump in. Let's take a look at the markets here. We just had consumer sentiment data here, as you can see, the big spike down, and then we're back up again. Really pretty volatile market, as you guys know, and it's the nature of the environment right now, as you guys know very, very well. So the VIX, let's take a look at the VIX here quickly and see where we're at. Now I'm just looking at the free it's delayed VIX data on investing.com. And this is a daily chart, so we're just getting a bigger picture, understanding we are still in elevated territory, no doubt about it, right? We've seen the move up, the move back down, the move back up, the move back down, and then we're kind of right back in the middle now. We are at a VIX level of 41.5 right now. Anything above, well, it depends on your preferences, but somewhere between, I don't know, 15 or 20, above 20 basically is elevated. It's a different trading environment, and that's what we're in right now. Funny thing is that you guys can see like how it usually price doesn't stay long up in that elevated environment in the VIX, in that volatile environment. You can see, for example, a previous one back in August. I even forget what this event was, but the move up and the move right back down. I mean, you options traders or anyone's shorting some of these really highly elevated moves in here are going to just make a bundle and pretty quickly. This one's a little more complex, as you can see. We have several days going back and forth here. This is a news environment. It's geopolitical. There's different tweets that come out. Changes up everything, right? No, I mean, literally, it will completely shift the markets. So that's the environment we're in. So we want to be aware of that. These kind of spikes like this, these data spikes, you should be prepared for them in this environment. Okay, for stops as well as targets. Okay, so place your targets. Make sure to place your stops in your targets because otherwise you can get wiped out. Now, one of the issues here with placing the your target for stops is exactly in here, right? These book sweeps like this and stop runs like this. You can see 114 stopped out right here, and price continued to go lower, and we don't see any transactions in here at all, though. None. Just the best offer went down here. No one sold though after that stop run. This is wicked stuff. Okay, you should anticipate it. Make it work for you in the environment we're in, because if you don't put your target in, and you want to put it up in front of this high liquidity up here at 53.50, and you don't put it in, and we get a massive spike up to that area, and then it fades all the rest of the day, you wouldn't have gotten filled. So it's a consideration, to take advantage of this volatile market. All right. Maybe you want to use really tight stops, looking for these kind of continuation moves, hits high liquidity, front run that high liquidity, get out, and then you can always get back in. All right. So we're going to go through all sorts of things now and jump into what's happening here. One thing right off the bat, as you guys can see, which is really funny, is you can see just kind of remnants of that algo behavior in here. You can see it in here. And if I make it a little bit brighter, see it in here and then over here. This just shows you how these markets work. This is such a beautiful thing to see in Bookmap because before, for months, these algo bands were really screwing up the heat map. I'm on just the regular contract here. I'm not even looking at Trader Map Lite or Trader Map Pro. We can jump over there if we want to see something else. But anyway, there's this environment has now changed. This player is gone, or most of it. Most of his order activity is gone. They don't want the risk. Okay, so what does this mean? This means we have volatility. It means that they're not going to take the risk. They're not going to try to, get filled in by shadowing price around in these areas in here. And instead, they are out and probably more directional trading or trading different strategies. Right. So anyway, that's the environment we're in. And good morning, Chano and Rob and Stephen and Alois and see D&T. D&T, that was from yesterday about the YouTube. You guys can hear me over in YouTube just fine. I was having issues yesterday. You guys can give me a ping or just let me know over in YouTube. All right. Okay, good. All right. Thank you, Rich and David. All right. Okay, so let's take a look at what's happening here. And this version of Bookmap that I'm using is rather special. I'm going to try to get you guys access to it as soon as we can. But we're able to zoom out a lot here, and this is really pretty awesome. So you guys know I've been touting this quite a bit. It's a continuous contract of the ES, and we're able to see all sorts of things. So this is back on April 9th. Yeah, April 9th, when we had that huge move to the upside when Trump had texted about he is going to put a 3-month pause on the tariffs. Okay, so we went up like 400, 500 points, right, from that point. That's the environment we're in, and here's that move. Now look what's happened so far. This is very typical in all markets. Is that move or that news happened here? Okay, we are within all of that environment still. Okay, and we can see all the big selling the other day here that dropped the markets. Okay, so now we're going to answer a question in here of who's in control of these markets at this time. Okay, well, we're above in the bigger picture here. Okay, and I don't know how big of a picture we want to actually get, but this news in here is dominating the market and the price action. Okay, now this is a secondary to it is this sell side move has also dominated the market. We have been within all of that selling so far. Okay, so basically, we're looking to see who's going to win the battle in here, and who's going to tip their hand one way or another. And right now, this is just complete chop, right, back and forth in a range, and you guys can very clearly see the range here between this 52.13 or 14 on up to 53.75, and that's it, and that's where we are. All right, so let's clear our drawings here, and then I'll just put in some horizontal lines here for the moment. Okay, 52.75 up here, 77, 75, something like that, and then down here. Yeah, let's put it here, and also down here. This is where the swing took place, and a swing up here as well. Might as well put those. Okay, so we're going to kind of look for those ranges and see what happens. And right now, we're not seeing anything. There's buying, there's selling, there's buying, and in fact, there's some selling coming in right now. Okay, so in fact, here we have some buying, quite a bit of selling, some exhaustion here. Okay, and then we see selling coming back in. Okay, so no buying up here, right? So what does that mean? Well, the test to this low here looks pretty good. Maybe we'll get another retest to it. Let's see. Okay, so would that be, this is not a trading opportunity. I want to demo something though. Okay, and I'm selling at the bottom of the range here. I wanted to get it on the pullback here. But we're just we want to see if at this point now, because of a lower high here, we had a lot of selling, that can we break it now? And if we do, where are we going to go? Okay, maybe to the swing down here at 87, or the high liquidity that came in here around 75, 52.75. Or maybe we're going to continue on lower. Let's zoom out again and look at our bigger range in here. Okay, that would be down to 52.16. That's pretty lofty. I like this high liquidity down here around this 65 area. Looks pretty good. That's plausible for sellers to move that. Okay, so in fact, they're starting to add more and more liquidity in there, as we can see here. Okay, so we are kind of in front of this liquidity at the moment, and we'll manage it when we get down here, right? And see what we think. Okay, so yeah, there's still some liquidity in front of it here. We're gonna stay with it and just hit a single here, right? And if we see a lot of buying coming in after trading to some of this liquidity in front, we'll just exit, okay, and look for the next trade. All right, now again, guys, this is not a trading plan. It's just demoing these with orders. I want to demo some of these concepts in here, so you get a feel for how to manage some of these concepts. So there's reality to it. First off, it's real time. It's real time analysis, and then secondly, like let's put the rubber to the road here. How do you manage it, right? Now, is this a good level? Is it all of these things adding up in here? It being high quality. That's not, if we see it in here, we'll take it, right? No problem. But we're here to demo it. Okay, it's not a trading room whatsoever. Okay, so we went through the risk disclaimer and disclosures in the beginning. And this is not a trading room. It's not a trading service. If you want that, you can go get that multiple places online. We have a lot of our own streamers and educators who offer these kinds of services, like Scott Pulcini, JTrader, Mayhem, Pirate Traders. I mean, there's many, right? So I'm not going to list them all. But you can go check it out. All right, and so we're out of that position, and that was it. That's all we were looking for, right? And move on to the next thing that we see, right? Okay, let's see if there's any other questions. Good morning, Shark. DNT. Okay. We good? We're good over in YouTube. Everyone says, I think so. It's just a thing yesterday. Okay, just going through all the questions in here. Yeah, that's probably a good idea. DNT is I should post the YouTube in here, link in here. Well, Shark, how about this? You'll get access to the whole MBO bundle, and you don't have to use the ones on chart if you want. Let me show you a few settings in here for the stops and icebergs. Number one is you can use it in the subchart right down here. Okay, so these are iceberg orders here. So there you can see that there's 160, 172, 30. They apply to what we see here in the subchart as well. Okay, and then these are stops with the red line moving down. Let me go through my settings in here. They may look different than yours, and it's certainly different than Scott Pulcini's. He uses a very different setting than I do, and that's what he likes. Okay, so anyway, I'm using this as summation for both stops here and for icebergs here. Okay, that is the accumulation mode that I'm using. So what this means is it's like cumulative volume delta, and the axes here are not aligned. Okay, so you can see, and I like it that way. The axes here for the red is in the hundreds here, and it's in the thousands here for the icebergs, right? So they're different. However, I like that because I just need to look at the graphical reference here of like, wow, a lot of icebergs are in general are picking up at this area right now. Okay, And I also want to see that in general, how are stops doing? Well, a lot of people getting stopped out. Okay, so here's what we've got now, right? We are at a more important level here. Okay, it's at the swing of the day here so far, 9:30. We have lots of high liquidity here. Okay, and I have lots of icebergs kind of buying in this area as well. And I have, look at all that liquidity that got filled in here. Okay, so I have the figure down here at 52.50 though. We haven't gotten there yet. Okay, but what we can see then is also the stops. People getting stopped out on the way down as icebergs are joining in. And now here's a 200 iceberg on the sell side though. Okay, so that's what took it down in here. So this is one way you can use it. You can turn the one on the chart. You can just turn it off if you want shark. Okay, that's this one here, the on chart. Or I'm sorry, yeah, this is on chart here. There's another way, shark, you can use this. Let's go to it here. And then we'll open up show icebergs. Okay, so we can look at this automated threshold, or you can put in your own threshold here. This is aggregation threshold, and then this is a individual threshold. Right, so right now I'm in the automated mode here, so it's going to show me icebergs that are 25 or greater. Anything less, don't show it. Right. If you don't like that setting, well, you can play around with the standard deviation intervals here in this automatic mode. Now you can, if I deselect it, you can input whatever you want here. You can put in 50, right? And it will filter them. As you can see, it's either 50 or greater now. Now we can go to automatic mode though, and we can use a 60-minute period, and we can use the multiplier here of right now it's 1, which will show 25. Okay, well, we can just boost this up, go to 3. And if we go to 3, then it's 62 icebergs in here. Whoops, sorry, 62, right? And this changes based off the standard deviation of this time and multiplier. And then you can see shark that you see quite a bit less in here now. And if you want to see even less, then use the aggregation in here, boost this up a bunch, and let's just see what this looks like. Yeah, you can see if it's 200 or more, then it will aggregate them up to 200. So now I only see 1 here. This is way too high of a setting for me. Okay, let's put in 50. Okay, so maybe this is helpful, more helpful. So you get just a few, right? And nonetheless, you can use it in the subchart here, right? Let me go over Scott's settings here because a lot of guys follow Scott in his trading. So he's using, I believe, sliding. The last time I checked, he's either sliding or just reset by time. I hope he's using sliding. And 1 minute is fine. And then we are also going to, okay, we're going to align them here. Okay. And let's see. How come I should be seeing spikes in here? Let's try it by reset. Okay, it should be working. It's just maybe a lot of icebergs and stops going off. You can filter it here, and yeah, I don't know. Maybe you like this version better. It's up to you. You can see though that they are the same now. They should be the same. Symmetrical. This is what I forgot to do. Okay. Symmetrical icebergs, symmetrical stops, and align. Okay, and should do the trick, right? So it's up to you. You know, zoom out a little bit here, and we can see where the spikes are taking place in some of these in here. Okay, and that's what Scott's interested in. So it's up to you, whatever you prefer. We'll go over more and more of this because we give you guys free access to it. Okay, for Bookmap Academy guys only. All right, so that's that. Okay, I'm going to go back to my regular settings in here. So mine is like cumulative volume delta. I really like it. Like I said, I have a reference to it, but it's totally up to you. So now let's take a look at the order flow at this rather important level. Now we came back down and we still didn't trade into 52.50, but we're seeing buyers now. Okay, our trend line. Let's look at this structure in here. Okay, our trend line broke, and now we have also a horizontal line to take a look at. We're in this zone right now, in between here, this 75 and 55, a 20 point zone in here. Right, and we know, what do we know about this area in here? We know that high liquidity was getting filled in here. We know that there's a lot of icebergs in here as well. We know a lot of people got stopped out. Okay, so we can see the big volume node here as well. And now we're looking to see the relative volume in this zone here, because we know that the sellers met the passive buyers down here in the liquidity heat map in these areas. Okay, that's fact. Okay, so now we're looking for the aggressors, and we just found some. Okay, so let's we can take another event here, and let's see if we can get buyers here to come in and trade up to the top of the range, and maybe they can buy it, because look at the buying, relative buying in here, right? So now I don't know if we're going to get the move or not. If I start to see sellers come in, I think it's a range bound trade, and we'll scratch the trade. Okay, but I'm looking to see if we can get buyers, and where might they go? Well, I would look for high liquidity and a measured move, maybe up into this zone up in here, or even higher up here at 10, 53.10. Okay, so let's go through targeting and why. Okay, so here is the potential measured move, something like this. It's not the most precise, but we're going to do it anyway. So yeah, so somewhere around up in here, and I would rather kind of front run that high liquidity up here. So I'll just move it up just a tad there. Okay, now is this a false breakout? It might be, right? It might be. We need to see here, okay? And then we'll scratch the trade. Okay, this happens a lot. Is you get it kind of to break out like this. We get another retest back in here, and then we come back up and we get our buyers. Okay, that's what's unfolding now. Now we need to. They have to follow through. Buyers have to follow through now, okay? And they're not right now. We can see that. Now that's exhaustion. So we have some absorption here, and we just had some exhaustion here. So if I do see, this is a very powerful thing, that absorption followed by exhaustion. Okay, so you can see we're getting follow through now, though. So the buyers did step back in, right? So we have our reasons for getting out up here, and that's that. And let's see if they can push it. Got some liquidity here in front running this level here at 93. Okay, so we're filled up here at 92 or so. That's it. That's all we're looking for. All right, hit another single. And boy, this environment, I tell you, It's kind of crazy. I mean, we're hitting a single in this environment from 70 on up to 92. You know, that's a 22 point move. Uh, so this is a very volatile time. And if you guys are trading, usually trading the E-minis, I would, you might want to, drop down to the micros, so you can stay in these longer and try to get more out of it. Or maybe you just want to stop trading completely, or you can scalp the heck out of it here. Look for these moves, hit a single and get out. Don't look for a follow through necessarily, because we might not get it in this environment. I don't know, just some considerations, and for your trading and when it's like this here. All right, let's see. What indicates an iceberg, David? David, iceberg is a hidden order. Larger players are using it because they don't want to show their liquidity in the order book, and it's an order type that is offered by the CME or also by different platforms. They have an order type, then they offer co-location next to the exchange, and maybe a hidden order type. Those are we're not able to read those orders that are synthetic. Um, the ones that are heuristic, or the ones that are native to the CME, we are able to read. Okay, I can give you some a reference here to it. This is really important to understand MBO. Okay, and what exactly MBO means. So we look up CME MBO, and that's it. And then here it is here, market by order. Read through it. It's very, very well. What this is all about is the kind of market data that they are offering. But the what the big thing they're kind of going over in here is, this is market by price, MBP. This was a revelation or revolution back in the 90s of being able to show 10 price levels deep and how much liquidity is at each price level, meaning how many are on the bid here or how many are on the ask here. Okay, so 20 levels altogether. This was huge. It was this is where the depth of market and domes came in the kind of mid to late 90s, and being able to see this was incredible. Well, market by order data is the same thing. However, see these little dividers in here? We can actually see the number of orders that constitutes the number of the volume of orders up in here. Okay, so now we can see like this one here. Let's say it's 500 orders in here. Okay, well, we can see that 1, 2, 3, 4 people are holding those 500 orders. Okay, something like that. That's market by order. Okay, from that information though, we're able to disseminate or understand. They have iceberg order IDs here. We can read iceberg transactions. We are also able to do it through our softwares, be able to understand when stop orders are transacting. Okay, so now we're covering in here in Bookmap, we're covering the order flow. Stops and icebergs is actually showing you the order types that are transacting within the order flow. So these order types give us a lot of insight to what types of traders are using them. So who's using stop orders? Not larger players. Okay, they'll just average their cost a lot of times. So it's smaller players, it's retail traders. So a stop run that unfolds up in here, 137, are likely people that were short in these areas, or maybe short in this area here, and they got stopped out. Okay, and that's important information. And iceberg orders are larger players because they have so much liquidity typically that like this is a 100 lot right here. Okay, and this totally transacted fully transacted here. So they are long 100 contracts in the S&P mini. And that was hidden from the order book. It was not here over in the order book liquidity in here. Okay, it was hidden from it. Okay, at least most of it, just the tip of the iceberg was shown. If you want, you can come over to our Discord. I've got a document here that I think I posted for you guys in the All Markets room that will go through. I've got it here. Hold on. It is. It's here. Okay. Yeah, it's this guide we put together a while back, actually, quite a while back, and it's the HFT guide with stops and icebergs and many other things. Okay, there we go. All right, so yeah, I just put it in here for you guys, and I'll pin it also to our room in here. Let's see, pin. There it is, pin message. Got it. Oh yeah, pin it. Okay. All right, good. So anyway, that document that I just showed you guys, let me open it up here so you see what it looks like. And it is going right to the page here. We need to rework this and make it again, but this goes through what happens to an iceberg at every step along the way here. Okay, so you can see 10. This is a 50 lot hidden order. The first 10 is put into the queue at the end of the line. So 10 lots of that 50 lot are shown in the order book. Only the tip of the iceberg, that's where it gets its name. Okay, after it transacts, it immediately sends another 10 right to the market. And then immediately another 10 after the market. Now, it's possible for other orders to get in between here as well. But this is how it works until it is completely filled or canceled. All right. Okay, let's zoom out here and let's see what else is going on here. All right, so so we got a double bottom pattern in here. We had our reasons for getting in, and we got in at a kind of a bad area here, but we were looking for a move up to the top of the range, and maybe we'd get the break. And this time we got the break. Okay, we had a measured move for our target in front of high liquidity here. Everything kind of worked out hunky-dory there. But you can see that this is turning into maybe something more of a continuation pattern. Okay, so impulse move, flagging, and then maybe we get another impulse move here and a move on up into maybe this 53.13 liquidity up here. Something like that. Okay. All right. Let's see. DNT. Good stuff, DNT, yesterday. Loved it. So in the Academy meeting. Good morning, Vinny. So yeah, keep it up, DNT. Actually, there's something that I wanted to talk about from the Academy meeting yesterday. That we've been talking about waiting for our higher time frame levels, kind of like we did down here. This one here, it wasn't a higher time frame level. It was kind of like, well, we had a structure in here, and we see a lot of selling. We have a lower high. We had basically some exhaustion up in here, and then we saw the selling come in. So we're looking for the sellers here to press the bottom edge and try to break it at that point. Okay? And we had our reasons for it in here, and so it our timing was good on that one. It did it. In this environment, boy, I'll tell you, I don't know about you guys, but the timing can be very challenging. Many times we'll get the move back down here and it rips all the way back up to here, or maybe makes a lower high here before coming back down and doing exactly what we thought. And this time we got the break and we got the follow through. Anyway, I want to show you guys something just even on this small trade example. Is if you can go with that kind of a little bit bigger picture in here, but wait for the pullback. And I missed it here. Our pullback was here. Our sellers came in here. At least we can get from this 5304, on down to here, to 98 or so. Okay, we would look for that because this is kind of a low volume pullback to where it dropped from here. And we see some buying here, but we see sellers coming back in. Look for the retest back down to here. Okay, I got in late, very little, like it's not even worth it almost to take your profit here. It might be in this environment. It's like 2 points or so. But we got the break and we got really nice follow through. So we were looking for, basically what we're looking for in here was not, I want to just say this was not a higher time frame level, but we were trading it down to a higher time frame level. Okay, so we wanted to trade it back down to here. We got in front of this high liquidity here, hit a single, and maybe we'd still get follow through down. Okay, but that's all. That's all we were looking for. Nice double bottom in here. Might have to make a video on that because we're starting to see that continuation pattern follow through here to the upside. So double bottom. Now this was a higher time frame level, okay, a better one, that's for sure. Much better. That's low of day, right? Yeah. And we had our reasons in here. We went through it. We had our higher time frame liquidity getting filled on the way down. We never traded into 52.50. That's kind of crazy to me, but it didn't do it. And we kind of learned from this one after waiting for it and then seeing the market tear away after we were really looking for it to trade and then get in. Instead, we saw this. We had our stops and iceberg. Actually, this was kind of pivotal. We had our higher time frame. We have all of this passive liquidity getting filled on the way down, except for 52.50. And then we have our icebergs absorbing on the way down and absorbing again here on the second leg here. And then look at our buyers here. Okay, so let's just take a quick look at this in here because this is a bit higher time frame, and this is what we're looking for. We have a lot of selling in here, right? Relative selling in here, and then everything kind of tapered off a little bit, but then we see the spikes in the buying in here. Okay, our relative buying. All right, so that's when would have been better to wait for a little pullback in here. We got in a little late here, right at this area. And then I was even thinking of maybe taking some profit at the top of the range, but we started to see some more buying come back in. And then up here too, like, it's starting to look like a false breakout, right? We stuck with it. We're kind of leaning on what? What are we leaning on? We're leaning on all of this in here. We're leaning on all of these buyers getting filled on the way down. We're leaning on stops and icebergs as well. People getting stopped out, icebergs buying. And then especially, at least in my book, I'm leaning on this volume here. Okay, so I'm looking for follow through. Well, I'm more looking for follow through. It might not do it. We might, we don't see much up here. We got a pullback in here, and we might have seen massive sell dots in here. If we got massive selling dots in here, we would have come back down and traded 52.50. Okay, but we didn't. We got more buying back up here. And that's when we started to kind of look for our measured move. All right, so we had to move. We had two different trades in here. One was not a higher time frame level, but it was a move to a higher time frame level. Okay, and looking for that momentum to in the break. And then this one was kind of reversal pattern in here into higher time frame. And we just went through the checklist in here of limit buys getting filled. We have stops and icebergs, stops getting filled, people getting stopped out, icebergs getting filled, and looking like we know they are buying icebergs. And then we see the aggressive buyers come in, and then we're looking for our follow through. And like I said, this could have chopped around in here, it could have traded back down in here. But if we have some of these things on our side in here, the probabilities are more likely. Let's just put it that way. Okay, so this is where this is all about the academy in here, of like noticing these things. This is exactly what we do in the academy. We notice these things, we mark them up on the chart, and then you start to put this together into a setup for yourself. Okay, by building out that checklist. And then once you see it over and over and over again, build out that checklist and test it, and then build out your image database in here in your journaling in the Bookmap Academy. All right, and then now you have something. You have something to lean on. You have a setup for yourself, and you also have data behind it. You have your own journaling behind it, and that will build your confidence. Confidence is everything, in my opinion. It's not just having the data to lean on and have confidence in that. It's also that you have experience now by going through it, by journaling it, by becoming familiar with it, by making it your own, and then you've really got something, and you'll be able to trade it again and again and again. Okay, and then start working on other markets, start working on other setups. Okay, because this setup here and this setup here worked for this market at this time. Okay, but maybe you wouldn't, like I was saying, this one here was kind of, there's always risk, but this one's kind of risky in this environment here. Maybe we got lucky on that one then. So because we know that in this environment, a lot of times we trade back down here again, we get one more rip up here, it fails, and then we get our follow through. All right, so and then go back and study. If that does happen, go back and study it. Why did that happen? Why did this one work out? Well, maybe the environment has shifted. That's possible. Another thing is we definitely can see sellers here, right? And then we had a lower high in here, and we definitely see sellers here again, right? And then this is the pullback I wanted to get in on, and then I'll trade it back down to here, and then maybe look for the follow through. So get a feel for this kind of these kinds of transactions in here, this kind of order flow in here, and this kind of market structure in here. And then what is it more likely to do? Will it break, or will you get another retest back up in here? And maybe it makes a lower high, like I said, and trades back up into this area here, and you see another one, right? Maybe you get stopped out on that one, but you see another like exhaustion up in here. There's no liquidity up in here. Maybe it's a stop run or a sweep, or I don't know, something. And then you see that selling coming in again, and it really starts to pick up. Well, you can trade it back down to the range and look for the follow through at that point, right? So anyway, hope that makes sense. And let's continue on. All right, let's see. Any questions over in, okay, David, how do they know they are buying? Well, we know that they are buying or selling. That is for sure, with stops and icebergs, because uh, like the icebergs up here above price action, uh, they're selling. Okay, these are like passive orders. Okay, it's like liquidity basically. It's just hidden. And if it's above, we know that they're selling. Okay, we just don't know if they're selling to enter or to exit. Right? So that we don't know. We also don't know how much is behind it here. We can go to the settings in here on chart, and we can add some of the icons in here. Show the event type, right? So and see it says E. That means it was this iceberg of 50 was fully executed. We know that that was the entire iceberg, but we don't know as it's filling, as it's in process of executing. We don't know how much is behind it. We will never know. It is hidden. And once we know though if it was canceled and moved, or just canceled completely, you'll see a C here instead of E. Or we will also know if it's fully executed. All right, it's the same for stops. If it's above price up in here, we know that these are actually buy stops. Okay, they were buying, and they were and it was here. We'll look at this 188 here, and we'll zoom in here a little bit, and you can see we'll see a stop run here. Yeah. Okay, there's actually a few. There's two. And you see they aggregated together. All right, so here, let's just take the heat map off for a moment here. This is what happened in this event. Okay, see these buying dots in here? Okay, these are buyers. Okay, and we can see here that the best offer is here, the best ask, the best bid is here. Now, you would say like, well, why isn't everything has to transact on the best offer? That is true. Okay, but there's a chain of events in here because we're down at millisecond level here. We can go down and we can look at nanosecond level. We can see every single transaction in here if you want to see that. Okay, we came from the HFT environment. So it was important for us to have this kind of accuracy. So we can see here that what happened here. Well, when price moved up one tick, no, two ticks actually, this is where this transaction in here was a stop. We know that it was a buy stop. It's just fact. Okay? We just know that from the MBO data. We are able to figure that out. And we know that everything in here with this little red line in here, it's not the best ask. It is a stop run. These are all stops, all the way up to this point here. And it aggregates them all together, and it was 140. Okay, we don't know if these were people getting stopped out, or maybe it's a larger player buying and entering in, or maybe it's both. Okay, we just know that they were buy stops, and I would say that this looks very, very indicative of a stop run. Okay, I mean this is a stop run. Okay, so it swept the order book. It meant that anything that was triggered in here was a stop, and it could have been, at one price level down here. It could have been one big order, or it could have been many ancillary orders that were within this area in here. So as we're going up, we're triggering more and more and more stops, and then we're getting filled in here. Or they're getting filled in here. They're getting slipped all the way up. Okay, and then it ends here, right? And these are all buy stops. So if it's above price, it's a buy stop. If it's below price, it's a sell stop. Okay, so these were sellers. Most likely, these are sellers getting squeezed and had to cover in order to try to keep their losses at a minimum. All right. The journal education, yeah, Abdullah Abdulaziz, let me show you what I'm talking about with the Bookmap Academy. You got to go to bookmap.com and then click on the more button here, and then under community you'll see the Bookmap Academy. Okay, and you're asking about the journaling, and we do this every week at Thursday at market close. Okay, 4 p.m. East Coast time, and you can see one from yesterday here on our YouTube channel. You can go back and review the recording here. Here it is here, right? So go check it out, and you'll see what we do. And you'll see that we cover other people's trades in here, and we start to go through and understand. Like we open up the mic for them, so they can explain what they were doing, and then we can give the coaching and feedback. All right, that's the program. Or it's a big part of the program. There's a lot more to it than that. You journal like exactly like this, and then you post it in our Discord channel, and then you can get feedback from others, and then we will also select some of these and then cover them in the webinar as well. Okay, so it's up to you. Click on the Academy link in here, and you can read about it, and you can apply right here, and you can read through the steps in here, what you get. You can actually get Bookmap for free and Stops and Icebergs for free as well. Okay, right now we have kind of a special thing, and we're offering the whole MBO bundle free for Academy members. Okay, and then you can move on to a coach, you can move on to a streamer. There's a whole plan in here. It's all part of the Academy. So just if you're interested in that, heck, you don't have to participate. You can join and just check it out and take it from there. All right. Okay, guys, what just happened? We have some news here, it looks like, to me, and we have almost retraced fully the entire move as well. So I guess the market didn't think too much of that news. And in fact, let's see if even sellers are willing to try to take this lower here. Underneath here, and I don't know. We'll have to take a look here. It's not a great level, but we can take a look here again. Same ideas that we started this webinar off with about who's in control in certain areas, right? Let's see here. We started with, this big move here, and then this move here from the other day, and we are still within both of them. Okay, these sellers in here are still dominated by the buyers, actually. Okay, but these sellers in here for maybe the smaller time frame, last couple of days, is still important. Hope that makes sense. Okay, and then here are our big zones that we had outlined here, and boy, we haven't even touched them yet. Okay, so in fact, we have maybe the swing low here. We can kind of mark up as well. I took some other trades earlier this morning, testing a few things out as well, some setups and as well as the opening range breakout trade, which we'll be covering more on that as well. See, I think I've got it in here. Well, I don't want to go over it now. Let's go over the live stuff. But the opening range breakout trade, I'll have a video on that for you guys very, very shortly. It's actually finished. I need to upload it. Okay, very, very simple strategy, but it can be very lucrative as well. There are risks and can be some really big risks with that strategy, though. And so you'll have to be very careful. Do your due diligence and make sure that you understand the risks and the edge involved. Okay. All right. Let's see. The circles don't mean more liquidity, Rayan. The circles here are the aggressors. These are market buy and sell orders. Okay, so that's typically the volume you're looking at, is always market buy and sell. Right, and it's what you're seeing in your volume columns and everything. Yeah, interesting. So we are breaking down below whatever happened here at 11. I don't think that was that. Did we have something come out at 11? Yeah, we did actually. FOMC. Well, we just have a speaker. It is not, that impactful though. But heck, you know, this is the environment we're in. I don't know. Maybe there's something more you guys came across, but just because there was a speaker at 11 o'clock, look what, the market reacted, pretty violently. It went up like 40, 5 points or so, right? So don't get caught up in these things and expect this to happen. Okay, so it will happen in this environment. Okay? And then you can lose a ton of money, and then it comes right back down and does exactly what you thought, and then you have no money left to take advantage of it. Okay? So be very, very careful in this environment. Anticipate these kinds of swings and this kind of chaos. Let's see here. Oh, thanks, Alois. Yeah, so just oh, okay, so actually Williams came out and actually said that tariffs will boost inflation from 3.5% to 4% this year, and the market moved up on that. Okay, that's just odd. Anyway, maybe just to kind of larger players in here, getting something done for themselves, or maybe it's stopping a bunch of people out. I don't know, but now you can see that we're below it and we're seeing some selling here. All right, so this was where we came from earlier actually, and where we broke out from, and we're below it now. That's what this line here is. Yeah, we're going to get some support in here, some supply, or some demand in here. Yeah, we are. We're seeing it here. A little bit lower though, between 70 and 65 in here. Okay, so let's take a look at this area in here. Now, this is not a high quality level. Okay, 50 is the 50 level down here is what we're looking at. We're getting our reaction in here. Okay, now I'm not going to buy this in here. I'm still looking for it to come back up to about 85, maybe higher, maybe 91 up here. But I'm just going to stay away from this one. Okay, we can have a swing right back down just as easy. Relative volume looks pretty good, actually. Okay, so we're gonna stay away though, or I am at least, and maybe that was a bit of a mistake because of that relative volume in here. We have high liquidity and relative volume, but I'm not looking for much out of this, at this point. And it might pick up, found the buyers here. We have the liquidity here, and then we're finding buyers again. Yeah, really great Academy meeting yesterday. Everybody really appreciated it. And looking exactly at some of these things we're talking about right now. Uh, this relative volume, high liquidity, it getting filled. We had a level in here, but it was just the level where we kind of broke out from here. That's all we've really got going here. Yeah, pretty choppy. Espen, what makes a high quality level compared to low quality? Yep. Well, we're going to look at market structure on that, Nate Dog, and the and zoom out a little bit. Okay. Market structure is a very important element, and it's swings. And as you guys can see in here, that's how we started this whole webinar off, by looking at some of these big swings in here and marking up our charts. Okay, so actually, let me get rid of these trend lines. Okay, we have our horizontal lines. And we kind of had a zone in here. Okay, so where are traders reacting? Okay, that's what we want to understand. It might be about market timing. Maybe you guys are looking at volume events. Someone like Scott Pulcini or Tom, they are looking at, or even the opening range bound trade. These are volume events. Okay, or the initial balance. You're looking for that first hour of activity, and then starting to understand where traders are in that activity, and then making decisions based off of that. Okay, so understand your higher time frame levels. Okay, it could, if you don't have a level, or you can see a lot of times the figure, the century figures, or big figures, half figures. Here, let's jump over to Apple, and stocks show it so nicely. Where do you think is an important level in here? Nate Dog. Okay, well, I mean, we've already traded to an important one here at 194. Okay, well, look at all that liquidity. We have almost 53,000 shares up here at 195. This is an important level. All right. Now the question is, in this activity in here, do we see buyers interested in trading up to here? Okay, if we do, that's what we're looking for. And right now, it's kind of back and forth. In fact, look what happened up here. Okay, and here as well. We traded into these levels of high liquidity. Okay, they're lesser important, but 194 is kind of important, and it was quite a bit, right? It was 21,000, 27, or almost 22,000 shares. This one over here was 15,000. Okay, and look where it is above the swing right here. Okay, so this is how you can, I'm demoing it with stocks because it's just so clean and clear sometimes. Here's a swing, and this is a big distinction here. This is support and resistance level, right? Okay, based off of the price action. And that's all it is just based off the swings and the price action. Okay, but how do we know if it's a supply level? Okay, we don't until you use the heat map. Now you know that there are sellers up here interested in selling, and these buyers in here never even tangled with them when they came up here. It didn't even trade into them, and in fact it traded into and through it here, and then up here it doesn't even trade into them. And look at the exhaustion up here. Okay, this is a double top. And then we're looking to see when the sellers really come in. They really kind of come in, well, in this time frame, they come in down here. And you look for a follow through back down to support, okay, which might be down here or the swings in here. Okay, this one did a couple of it did another retest before trading down to the not support but the demand. Okay, this is true demand. These are limit buy orders down here. Okay, so we have 85, almost 8600 down there. Okay, so now we made a distinction between what is support and resistance and what is supply and demand. So this is resistance up here, but it's also supply, okay, because they're right here. Now here, this is what happened in here. Well, it's resistance and it's supply, but see the big green dot? There's more aggressive demand to trade into and through all of these sellers up here. You trade to the next level. And then it just kind of chopped around in here until that news event happened here. Then we trade up to this 194. This is what absorption looks like. All of these buyers trade into this level of high liquidity at 194 and do not trade through it. Okay. Technically, it looks like they did a little bit, but we're not going to cover that. We're just going to cover that absorption is when we trade up into a high level of supply, in this case, and the aggressive buyers are all completely absorbed by the passive sellers. It can't get through that level. And then you can look for mean reversion trades at that point, or reversals, or, where there might be demand for it to trade. Okay? And this is how you can start to use this information to develop a trading plan for yourself. Okay, so this would be an important level on this time frame. Okay, and then in Apple, we still see the really important level up here at 195. Okay? And we don't see how we're not getting demand though right now. In fact, we can even look at this, and I won't be able to trade it. Yeah, because I don't have a demo account for stocks. And I'm not connected. I'm connected to the live market. I'm connected to the real trading mode in here, but I am trading in sim with the futures into our simulated account. Okay, you can see it right here. It says ES Demo Sim that we're offering this. Okay, so this is a great environment for you guys to forward test your stuff in here. Okay, so hope that makes sense. But if we don't find our buyers up in here, and we see selling starting to come in on the other side up in here, and we have exhaustion up in here, etc., I would look for the sellers, and I would look for it to trade back down to. This is one area to look for in structure, because this is where it broke out from. Or you can look for the bigger swing down here, or high liquidity down here, 191 or so. Okay, because I don't see anything else in here. Here, they're just starting to come in a little bit at 192. Okay, so if that's the case, then maybe you see that high liquidity in here, you want to reduce some risk at 192. That might be a good idea. Okay. I hope that makes sense. All right, so anyway, these are some of the higher time frame levels of importance to understand. Okay, zoom out, take a look at the bigger structure. Then you're looking for events around those structures. Does Bookmap have Forex? No, we do not. There is no centralized order book. Even the transactions and volume are kind of sketchy to understand if it's quality or not. Okay, so we need a centralized order book, right, or exchange. Otherwise, we cannot show liquidity. So what you can do instead, though, is you want to look at the currency futures, no problem. So let's look at the 6E, for example. Okay, the 6E In fact, I can look at the continuous contract here. Fantastic. And it tells me it's the J contract. Did it move over? No, it shouldn't be the J contract. That's wrong. Okay, that there's something still, as you guys can see, we're still working out the kinks here. It's got to be the M contract. So the June contract here. So you can look at the euro dollar here, for example, on the CME. Okay? And it does have a very centralized order book. And we got an issue here, but anyway, here you can see the liquidity levels and the transactions as well. Okay, now look at the difference here in the order book, right? In the heat map. What's going on in here? Okay, well, this one is pretty clear. This, to me at least, this is a more important level down here because this liquidity has stayed in here for a while. It's near the swing here, and there's more liquidity down here. Okay, but you see how these orders in these areas are pulled and added into different areas? Because the way that this instrument is used is to hedge a lot. There's a lot of other traders in here using this market the way it was designed to be used for hedging. Okay, and we know that, I mean, look at some of the behavior in here, that this has got to be the same player. It pulls liquidity here, adds a little higher, pulls it, adds a little lower. It's synonymous with this one down here and this one here as well. And also relates to these down here on the bid. Okay, so larger player behavior in here dominating the order book. No question about it. Look at these areas in here, like pieces to a puzzle, right? And adding and pulling of liquidity at these price levels. Okay. So anyway, you can see it very clearly in all of these markets, but some of these instruments you can see it clear. Okay, let's go back to our S&P and zoom in a little bit. Anyway, guys, so there are a bunch of traders like maybe you want to look at your fib levels. Maybe you're looking at floor trader pivot points. Maybe you are looking at volume profile areas here. So like look at today. I mean, we have one big, really, pretty much just a single distribution, right, of all the price action, and that's it, right? So pretty big, ugly looking distribution here. High volume node is right up here. Okay, so maybe you're looking for a mean reversion type of trades, and you look for, okay, well, do we have buyers at some of these levels in here? Aggressive buyers after trading into high liquidity. You can look for maybe a mean reversion trade, back to the top of this range in here. Not a bad idea, but we have to find buyers. Okay, we found a few in here. It's not bad. Okay, and let's see if we get a few more. And now the London close is coming up right now, or the European close. We're going to get some volatility in here. All right, so this is not a good time to trade. Be aware of that. And also, let's just go through maybe a potential setup for a mean reversion trade. I'm not interested in this trade. I'm looking for it to trade into 50, and then I want to see it absorb it, and maybe goes through it exhausts. I'm looking for then the aggressive buyers to come in on the other side. Okay? And then maybe we can get up to the top of this range, and then the top of this one up by the high volume node up here, or point of control. Okay, makes sense. I know that Trading His Life is probably all over this. Here's one of the levels he's using in his trading is VWAP. Okay, so and I don't know if you're making anchored VWAPs Trading His Life, if you're doing much with those. But let's put in our VWAP here. And I've been kind of playing around with this these custom bands in here a little bit. I'm not much of a VWAP trader, as you guys know, but let's make this a little bit here on the eyes. Okay, so so here's our VWAP up here, right? Just around 5,300. And then we've got one standard deviation line, two standard deviation lines, and then 2.5. And you can note that some of these big moves, like usually around 2.5 is a maximum. And that's where you can start to look for lining these up. Like this is beautiful here. Line it up with your high liquidity at 52.50 here. And now this is not a trading plan. It's an idea to explore and build out your playbook. Okay? And back test it. Use Bookmap's replay mode. Go back test this. Forward test it. Use your demo account up here. Use your trading statistics in here. And I don't even have my web trading journal open here. Use your trading journal here as well. Okay, and let's see here. I think I can open it up in time. Pity I don't have my journal on, but let's see if I've got. Oh yeah, I haven't even used it for some days now, and that's a pity. Let's see. Quite a few days. Hold on a minute, guys. I'll get there. Okay, there we go. All right, so now I got some data in here. So you can use your. This is all free. It's all part of Bookmap Global Plus. Okay, so you can put in your specific dates up here, the times as well, and click apply, and then you can see all the data in here from that time. So this is from the 1st of March to 6th of April. And then you see you have your P&L curve, but you've got your biggest win, your biggest loss, your average win, your average loss. You've got all sorts of other statistics in here about your win-loss ratios, all this kind of stuff in here. These are all great tools to build out your trading plan. Okay, and then use just use those tools with what we're just covering in here. A trade idea like in these webinars, and then start to track it. Start to use that replay mode in Bookmap, and then rewind it again, play it again, trade it again, rewind it, trade it again until you get it down. You know what you're looking for precisely. You have a checklist, and then start forward testing it and use your demo account in here, and then you'll be an expert with your setup. Okay, so let's see, what does Trading Life say in here? He has been using Anchored View app a lot lately. Good to hear. Okay, and I imagine well, maybe we can talk more about that. Trading is Life, about how you're finding your important VWAP levels, anchored VWAP. Like I would imagine down here is a good one, from earlier today, the swing low for today, and probably already broke it though, to be honest. Anyway, yeah, and you're liking that, digging that trading journal. That's great. I think these are great tools, guys, and they're all free. You can get really good with your trading here to make it and then bring it to the next level, right? All right, so let's see, maybe it's time for a mean reversion. back to 5,300 here. What do we got here? Well, we never traded back down to these levels, so that kind of negated it for me. And I wanted to see 5,250 trade, but we do have some. We have some relative volume on the buy side that looks pretty good to kind of climb further up to maybe 5,300. All right, but it's kind of iffy. There's a lot of selling in here too, right? In here, and you can see it in here. But this is pretty strong buying. And yet the strong buying was unable to kind of lift the markets. So, that kind of negates it for me. Again, like, really want to see some of these high levels of liquidity trade, and then we want to put that context together with the aggressors. All right, guys, let's wrap it up. Thank you, everybody, for coming. Good week. Great meeting yesterday at the Academy. Great work, you guys. Great work, coaches. And let's continue on Monday. All right. Yep. Thanks, everybody. Have a great weekend, and we will catch up with you on Monday. Be careful out there. Okay. All right. Thank you, everyone. Yep. Take care.